What's up, guys? Welcome back to DCA. Tonight, what we're going to do is take a look at active addresses on the Bitcoin network in relation to the price of Bitcoin. The reason we're doing this is because anytime you are evaluating the price of a network, you need to know how many users are on that network. And you can apply this to basically anything. Think about the number of users on the Facebook network. Think about the number of people watching a sporting event. Think about the number of customers on a particular cell phone network. So this is how companies and how institutions derive value for a network. So if you've ever heard of Metcalfe's law, this basically says the value of a network is equal to the number of users squared. So each new individual user or each new set of users, however you want to think about it, is worth more than the prior. And we're going to take a look at that and see if that holds true for Bitcoin. So in pink, we have simply our price, the price of Bitcoin. And then what you see here is in blue, this is the number of active users or active addresses on the network per day. And what that means is it is simply the number of addresses which take part in a transaction on the Bitcoin network per day. So theoretically, then there would be a positive correlation between the number of active addresses on the network and the price. And sure enough, just looking at this here, that's what we see. Over time, you're seeing the number of active addresses on the Bitcoin network increasing. And what you'll notice here is back in 2018, we had this rapid spike where we went from about 700,000 active users on the network to the extreme parabolic phase that we saw at the end of 2017. And we went all the way up to about 1.1 million active users. Then when the price started to tank, what happened to the active addresses on the network? They tanked as well. And they went all the way down to about 550,000. So if we look though, essentially what you had was a situation where during the entirety of basically let's just go from about right here where the market sort of leveled off and then started going up. The number of active users was somewhere on average, between 300,000 all the way up to around 600,000, just prior to the parabolic phase of the market cycle back in 2017. So what you'll notice is that during this cycle, we sort of saw a new average establish. Now, the peak number of active users, which is not a good representation of the true value of the network, because remember, the peak users appear right at these parabolic phases. And we all know what happens at the parabolic phases. They rapidly increase and then they rapidly decrease. Now you could argue, 60,000, 69,000, those weren't true parabolic phases, fine. But the point remains. In this cycle, we had a situation where we were on average between 300 up to 600,000. Then during this cycle, on average, we were somewhere between 600,000 up to about a million active users. So we've basically established a new paradigm in the market. Now, this is the important part. So, let's just say 300 and 600,000. That's what we're calling the average back in, the 2016, 2017 market cycle. So we'll just round it off and call it 500,000. And if we look at what was the price when the number of active users was around 500,000, and the price was around only, the price was about $450 back then. Okay. So, we were in a situation where the price of Bitcoin at that time was only a few $100s. Now, fast forward to this market cycle. Well, let's double the number of users. So we went from active users at around 500,000. And when we go to a million, what happens? Well, we're still not in the parabolic phase of the market cycle. So, we know we're getting somewhat of a more true representation of what the value is. When we were somewhere closer to about a million users, our price was around $11,000. Currently, we're at a million users as well, and we're sitting at a price of around $40,000 or so. So, in spite of the fact that the number of users have only doubled, what has happened to the price? And essentially, the price has went up. If you think about it, somewhere between $500 to $600, maybe more, maybe up to $1,000. The price has went up between 10 to 40x in spite of only doubling the number of active users. So, what we're getting at here. Right now, we're sitting at approximately a million users. But a lot of people in the world, and I don't think this is hyperbole here. A lot of people in the world haven't even heard of Bitcoin yet. So many people, still have the idea that Bitcoin is too risky to invest in. But I think that, this sort of stigma behind Bitcoin is slowly starting to come down. And the point of this entire analysis is to say that even smaller increases in the number of users is leading to a rapid increase in price over time. Okay, so what we're seeing here is simply the price divided by the number of active users. And I'm putting it on a linear scale just to sort of give you the true impression of what we're talking about. And what it's saying is that for, any given number of users that we add onto the network, we're seeing this effect where the price is exponentially rising. So it's not even taking that large of a number of users coming onto the network to make the price go to these entirely new levels. And this trend has just continued repeatedly from each market cycle, from the first to the second to the third up to the fourth. And we're just seeing it happen over and over and over again. And perhaps more importantly than these peaks that you're seeing, these peaks where the price sort of runs up to these extremely high levels for any number of users. More importantly than those, the average price over the length of these market cycles is increasing, because that's what's going to matter at the end of the day. It's the average price. It's not going to be these extreme peaks. In fact, I suspect, at least for Bitcoin, these extreme speculative peaks are going to start to, they're going to start to fade away. I don't think we're there yet. Obviously, as we're seeing, these rapid price swings happen yet again. But I think you're going to see this slowly start to fade, especially from Bitcoin, as you get more and more users onto the network, creating a certain level of stability and diminishing volatility. Okay, guys, so this is the last thing I want to show you, just to give you an idea of how significantly the value of the network is growing per active user. So back in 2011, when we hit this first market cycle peak, we were sitting at a value of around 0.002 per user on the network. Okay, so we're looking at price over active addresses yet again. In the next peak, we hit at around 0.008 per active address. All right, then we got up to 0.018 per active address. Okay, so it's been increasing significantly each cycle. And then in this cycle, we got up to about 0.07 per active address. Okay, so we're almost at the point where we were hitting, 10 cents per active address on the network daily. All right, so right now we're at around 6 cents. Back then we were at around 1.6 cents. Prior to that, we were at even less than a penny. We were at 6 to 7 tenths of a penny. And prior to that, we were at about 2 tenths of a penny. So we went from a position where back in 2011, each individual user on the network was worth, or each daily active address on the network was worth around, 2 tenths of a penny. And then last cycle, it was about 1.6 cents. And now we're all the way up to a place where we're at around a value of 6 cents per address on the network. So you're just seeing this exponential growth. And like we said, it's only taking small numbers of users now to really move the needle. So I suspect that you're going to continue to see this trend go forward into the future. And, in my opinion, we're, even if we go into a bear market, we'll see a point where the price goes way down, but that's just going to be an opportunity to buy more at the end of the day at a cheaper price. You know, like I always say, you want to think like the institutions do. The institutions don't want to be buying up here at 60,000. They want to be buying down here when the value of the network is relatively undervalued, when people are undervaluing the network. That's when they want to buy. That's when you want to buy. You want to start to think like the smart money does. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. You can head over to the Discord channel to sign up for the DCA Index Risk Model. It's a machine learning algorithm model that I've developed to help you identify where market cycle peaks and bottoms occur. So, with that said, until next time, as usual, see you.